Hi, this is Dustin with Dustin's Dollars. Today I'm going to be talking about Tellurian. I'm going to be looking at what the potential gross profits could be from Tellurian in starting in 2026 of Driftwood LNG Phase 1 by taking a look at what some of the current futures prices are for gas in 2026 and beyond. Before I begin, let me remind you that I am not a financial advisor or a financial professional of any sort. All opinions that I express in this video are mine and do not represent those of any company or any other individual. I currently hold a long position in Tellurian, so basically this video should be for entertainment purposes only because I could be wrong about everything I say in this video. You need to do your own research before making any investment decisions. So, I have gone over this before. I'm sure if you are at all interested in Tellurian, you've skimmed through their investor presentation, you've seen this high level math, the model of here's the profits that Driftwood LNG could make. It's a pretty simple model. You have the LNG sales price, subtract off how much it costs you for the gas, subtract off their cost to liquefy and transport the gas, and there you go, you have the margins. Now, what this doesn't capture is really the fact that the LNG sales price is going to vary every month. And, they just sort of stuck a number here as an example of $12. And again, this is actually after transportation, JKM less transportation here, right? They do call that out. And that your cost of gas, your source gas, unless they go with the fully integrated model, is also going to vary. And what I'm looking at today is let's actually look at those futures and do some calculations. And I'm starting here from the numbers for the futures in 2026 and beyond. Since Tellurian has started construction on Driftwood LNG Phase 1, we know that they, assuming they get financing and everything goes to plan, they will be shipping LNG in 2026. I'm not exactly sure when in 2026. I think that there was, some filings that indicated when that might happen, but for today's video, for just the example that I'm going through, I'm going to assume that they would start shipping gas in January of 2026. And then I'm going to look at, what is the spread? What does that mean for their gross profits? And the reason why I'm actually looking at this now is because I'd looked at these numbers in the past, but the futures all the way out in 2026 and beyond hadn't really been reflecting the crunch, right? If you looked at this, and let me pull up the actual chart for the January 2026 JKM futures. Let's see if I can make this so it actually is a good size for you here. So I've been looking at this in the past, and the values were around 11. Even back in March when I was looking at this, I mean, they did spike up a bit. They went up in the 13s, but it was like 11, 12, 13. And again, this is the actual JKM price. So you'd have to subtract off, I think, at least the number I've seen is roughly $2 to account for the transportation from Tellurian down in Louisiana in the US all the way to over in Asia, where they'd be using the JKM pricing. And so when you look at that, it was below the $12 that they were using in their example, in their presentation. And it just never was anywhere close to a credible number. Let's say if you do believe that that there is going to be a supply crunch, or at least somewhat of a shortage for LNG that is going to drive prices up, and so the $12 just wasn't really credible. And my understanding of the way futures work is when you're looking at futures that are years out, such as this, right? We're 4 years out, almost 3.75 years out from January of 2026, that, people might not want to pay for the futures right now. So there may not be quite as much demand for the futures, 4 years in advance as there is going to be. And, we saw this where if you looked at the JKM futures in earlier months where the value is obviously much higher, we're up here in the 20s. It's 24 for June in the middle of the summer, 27, 28, 29 this upcoming winter, those prices sort of go down over time, not necessarily because LNG is the situation's going to get any better, just because people don't want to put their money down 4 years in advance for the for the future delivery of the LNG. So that's why I hadn't really put too much stock into this, but we've seen these numbers recently go up and start to reflect at least a bit of the fundamentals here. And so I'm actually using these numbers here. And so what I did was I copied these numbers out from this for the prior settle from every single one of these months. For JKM, I'm getting this data from CME Group. For JKM, they had data from 2026 and 2027. I also looked at a Dutch TTF, right? This is the gas in Europe, effectively, as I understand it. This one this is not LNG, this is actually gas, as far as I understand it. And so this would incur one additional cost to liquefy the gas, or regasify, I suppose they call it. Sorry, not liquefy, to regasify the gas that from the LNG that is imported that would be shipped to Europe. And I mean, by the way, the prices for this is insane now. I hadn't looked at this for a bit, and that's ridiculous. Look at sorry, I just have to bring this up real quick. That this got over. I mean, I should have known this. I just hadn't been paying that close of attention, but got over $200, and even still, it's up over 99. This is for the near term. That's not the case for 2026. Although in 2026 the prices are still elevated quite a bit now. You see this up at the $44 range, and if we look at that, and I'll get into the meat of my model in just a moment. Just wanted to show this, that this has gone up materially since I actually looked at this in detail in mid-March. And I mean, yeah, it was up in the 30s, and that had already been going up, but that's even it's going crazy, up in the 40s. So if I use these numbers, and then I also compare against Henry Hub prices. Henry Hub prices in the near term have been going up, although you look at the futures and they are not. They are low. They go down, and they're pretty flat for quite a while. 3s and 4s, 3s and 4s, 3s and 4s, sort of in perpetuity. It's not in perpetuity necessarily, but for quite a while. And they have these futures for many years out. They have CME Group, I should mention, has the TTF and Henry Hub futures all the way out. They have TTF all the way out until 2032, I think. And so I also got they have Henry Hub for even further. And so I got the data all the way through 2032. So what I did was I copied those out, put them in a spreadsheet, calculated, this is real quick, calculated the spread between those two, right? What is the difference in price between JKM and Henry Hub? This is not necessarily what Tellurian would get for profits, but this is just the total potential opportunity month over month. And so you can see that the red is the JKM, the blue is the Henry Hub, and so the yellow is just the difference. That's the spread. And so you can see the spread here is, above 10 for most of above $10 per MMBTU for most of 2026, and then somewhere around 7 or so in 2027. So that's a modest spread. It's a good spread in 2026, not quite as good in 2027. And again, that's for the reasons I've talked about before. This doesn't necessarily indicate what the prices will be at that point in time, but we could actually look and see what would their profits be at those levels. Gross profits, again, this is not take into account operating expenses or debt, but this would just be sort of rough gross profit calculation here. If we pay the Henry Hub, you pay $1 per MMBTU for liquefaction, $2 per MMBTU for transport, to ship the LNG, and then you have this JKM price here that you're end up selling it for. And I multiplied that out. I believe got the math right. This is their roughly 550 BCF per year, divided by 12 for the 12 months. These are monthly figures. So I figured they would be making $425 million of profit in that first month. As things go on here, you can see that they would be making about $4 billion in profit in 2026. sorry, this column here is the cumulative, right? If I add up every month, and then by the end of 2027, they would make roughly another $2 billion in gross profit. So not bad for sure. And that's, I think, roughly, that's a little lower than what my model had before. But again, this is just giving you an idea of what it would be. Again, my goal here today was just to look at what are the current prices of the futures and what would that mean today. Not necessarily going to be specifically predictive of how things will be in 4 years from now. But the real interesting part here, let's look at the TTF futures, right? Because the TTF prices are much higher. And as I said, you can see this column here, the TTF prices are, hopefully you can read that, in the 40s. Henry Hub, as I mentioned, is in the 4s and the 3s out in 2026 and beyond. And the spread here is 40, 30, 25. This is significantly higher than the spread for JKM. Significantly higher. And you can see on the chart here, let's see if I scroll over and make this just a tad bigger, maybe you can see this better, that your spread here all the way out into 2032, where it's the lowest, right? And again, because of this impact you have of the futures prices sort of going down over time, whether that's predictive or not, who knows. But you see that spread even out there is at $15. So significantly higher than JKM. And you see all the way for the 9 years, even before that, 9 years, that's not right, 5 or 6 years, I guess it was starting in 2026. The spread is initially it's in the 30s. Initially it's at $40, then in the 30s, and then in around $25, 22, somewhere in the 20s, let's say, for years. And if I sort of make a rough model out of that, and I say again, paying Henry Hub, pay $1 per MMBTU for liquefaction, $2 for transport, pay roughly $1 for regasification. And again, these two numbers I just pulled directly from the liquefaction, the transport costs from Tellurian's investor presentation. The regasification costs I just got from Googling. And these are just rough numbers, right? I don't necessarily expect that these will be perfect, but these are rough numbers to give you an idea. And then we sell the gas at the TTF price after it has been regasified. Your margins there are huge, right? This is almost 4 times the profit that you got from the similar month of the JKM. As you can see, after 1 year of selling, if we were selling at directly the TTF price with that cost model, there would be $16 billion of profits in the first year, right? So you would pay for Driftwood LNG phase 1, roughly speaking, in a year with gross profits. And again, it's more complicated than that. There are operating expenses. There's going to be debt payments. But that's huge. And then if you project this out, here's what the graph looks like if I add up the profits every month. You can see here by, after 2 years, the beginning of 2028, they've made $30 billion in gross profits. By 2030, that's $52 billion in gross profits. That's huge. And yeah, this is really the current, picture when you hear Sharif Suki say, the fundamentals have never been better on a global basis. This is exactly what he means. The price, the spread is humongous. And, if you watch his most recent video, I think it was the most recent one, where he did talk about Henry Hub, and he said, look, Henry Hub prices have gone up recently, but they're basically tapped out on demand because all the LNG exports that were going to actually taking gas off the market is priced in at this point, and that production is creeping up that is going to bring these prices down. And so there's reason to believe that at least at the current moment with current LNG exports, these prices are credible, that for the near term the prices will be elevated, but that more and more gas capacity in the US will be coming online, and that by the time we are looking out into 2026, there will be plenty of production to meet the demand, without prices spiking, right? Because prices have roughly, I think, doubled this year even for Henry Hub gas. Give me a moment. Let me get this to an appropriate. Yeah, so at the beginning of the year, prices were 376. Now they're, 692. So, they've roughly doubled this year. Henry Hub prices are, and again, he's in a much better position to speak to this than I am. So I totally defer to his analysis and his statements. Go watch his most recent video if you haven't. But it does, the logic makes sense to me as to why Henry Hub prices are not going to continue to spike up, but that you might have prices spiking as they're suggesting here for gas in Europe, gas in Asia, or LNG in Asia, let's say. So that is what I wanted to cover today. The TLDR is if they can get Driftwood financed and built and on time and start delivering gas, I think they've got quite a lot of money to be made selling at TTF prices. In JKM, if that goes up, like, it's nothing to sneeze at, but if these prices go up even a bit, everything that goes up, I think that's not necessarily going to directly be an increase in the Henry Hub price that they're going to have to pay. So this could be very profitable as well. And I think, again, just reiterating why I am personally invested in Tellurian, and just looking at those fundamentals, that hopefully if you're a long investor, it gives you a little bit of insight into what the future could hold. So, all right, let's check anything on the chat. Nope. All right, nothing on the chat. I should mention, if you've watched this far, I do these videos live on YouTube, and I usually do these the Sunday night through Thursday night, around 10. Sometimes it's, this is a little later. Sometimes around more like 11 p.m. Eastern U.S. time, if you ever want to join. So feel free to do that. I'm happy to have folks on the chat and get some discussion going back and forth. That would be cool. But that is what I wanted to cover today. Thank you so much for watching.